I think global investing, broadly speaking, for most people means the US multinationals, a handful of the big well-known European export leaders in consumer products, in the food space, in the pharmaceutical space, and then the major index components. In other words, I think global investing in general, people think of as sort of a passive endeavor. But it turns out you can add a lot of value through active management in the global investment arena if you're willing to break away from the crowd and invest in global equities on a more opportunistic and idiosyncratic basis versus the indices. We think we have a time-tested investment framework that can continue to add value, and that's why we launched CDIG Global. I'm Vin Walden. I manage the global equity portfolio here at City Different Investments. We've been managing global equities with this framework for, call it 20 years or so. With City Different investment clients, we're now 4 years into providing this service. So we're really excited for this next offering, this evolution. We think this will be a terrific tool and another way for our clients to participate. We decided to launch CDIG as an ETF in response to demand from the market. Simply put, our clients and our advisor partners are attracted to the many elements of the CDIG ETF, including the operational simplicity, the flexibility with respect to account size, and of course, relative to mutual funds, the compelling tax advantages. So we've been hearing for a while now that this ETF would be a popular additional instrument, a tool, if you will, for our clients and our advisor partners to have, and so we're excited that we've finally launched it. This is a global, opportunistic, focused portfolio of 20 to 30 equities. We're flexible with respect to geography and flexible with respect to industry. In other words, we want to go where the value is, using our lens, our filters, to find compelling investment opportunities. We're looking for investment merit more than size as a primary consideration. And so that leads us to have a portfolio that does not resemble the benchmarks. There's many dimensions to this, but it boils down to essentially 3 pillars. We're very focused on the quality of the business, and quality as we define it, it depends a lot on competitive strength and competitive entrenchment. Number 2, we're looking for valuation. It's not, a growth at any price. Of course, it's where we want to avoid hype, we want to avoid fads. Therefore, we pay a lot of attention to the price we're paying for a high-quality business. And the third piece, the third leg of our stool, if you will, which is sort of our secret sauce, is our team is very focused on a hypothesis or a path to success over a measurable time frame of what might happen, what might be up around the corner as far as industry developments, changes within a company, sometimes multiple milestones, events that we're looking for that could cause favorable outcome for our investors. When we find a company that scores highly along all 3 of those dimensions, then that could be the building block for a global focused opportunistic portfolio such as City Different Global Equity ETF. We're more concentrated and we're more idiosyncratic. At the same time, of course, we're diversified and we care about risk management in all the usual ways, and common sense industry diversification and common sense geographic diversification is a prerequisite for the portfolio at all times. But it's important to emphasize this does not resemble a benchmark. Why don't I give you an example of a theme for most of this century? Electricity has been a no-growth industry and not a particularly exciting industry, in my opinion, heretofore for investment purposes. We cottoned on to this energy transition theme several years ago and recognized that electricity, lo and behold, may become a growth area and an interesting area for investors. Simply put, this trend towards the electrification of transportation and now this trend towards AI permeating society, both of those factors bode well for demand. There are enormous changes underway in the way that we both consume and produce energy in the world and in the United States. And with those enormous investments that are underway, we think there's some good opportunity for investors like us to participate. We try to recognize some of these mega trends and be positioned accordingly if we think that the value proposition and the opportunity is sound. Russia has been historically such a powerhouse in commodities broadly and in the oil and gas and energy industry specifically. But now there's a strong impetus to find better suppliers, more secure supply. And the overall theme that we're participating in and continue to hypothesize about is a demand for more secure sources of many essential commodities, whether it's wheat or copper or uranium. There's strong demand in the future, we think, on a global basis for better and more reliable suppliers. And so that's an example of the kind of multi-year megatrend that we think perhaps investors can take advantage of. Our framework is predicated on awareness and acceptance of the macroeconomic backdrop, but an emphasis and a focus by our team on the microeconomic reality and prospects for our companies. So it's macroeconomic aware, but a focus on, okay, given the backdrop, how can we position ourselves in a compelling way? So how can CDIG fit into client portfolios? This is a global focused, opportunistic portfolio. You don't get exposure to the biggest companies per se. You get exposure to compelling themes that we think can be monetized, can be captured for clients. So you have a benchmark agnostic, focused portfolio participating in these themes, and you're aligned 100% with City Different using the time-tested investment framework that we believe in fervently. I think it's important to emphasize still that equities are a volatile asset class inherently. And so in my view, and I know the view of the City Different partners, equities are suitable, and the CDIG global ETF is suitable for investors that have both the financial wherewithal and the psychological or emotional wherewithal to stay with the investment for a longer period of time. City Different partners are significant investors in our global equity strategy. And clients in CDIG are 100% aligned with the City Different partners with respect to the risk and reward. And we think candidly that our framework will continue to be compelling. So we're real excited that CDIG is now available on the NASDAQ. Can you dig it?